So I've been working on how climate change is affecting the stock market. And I want to start with a question for all of you. The question is, over the last decade, which do you think performed better, green stocks or brown stocks? So a green stock is an environmentally friendly stock. A brown stock is an environmentally unfriendly stock, like a coal stock. So raise your hand if you think over the last decade, green stocks outperformed brown. All right, and how many think brown outperformed green? Okay. The answer is that green outperformed, all right? So what we've done here is we created two stock portfolios. We took the third of stocks that are the most environmentally friendly. We call those the green stocks. Here are the third of stocks that are the dirtiest stocks. And over the last 10 or so years, green outperformed brown, and not just by a little, but by like 174 percentage points. So now, a different question for you. What about the next 10 years? Do you expect green stocks to continue outperforming brown over the next 10 years? Raise your hand if yes, you expect green to outperform over the next 10 years. A lot of people say yes, you expect green to outperform. We say the opposite, all right? Why do we say the opposite? First, we ask an intermediate question. Why did these green stocks outperform over the last decade? And our prediction or our hypothesis is that what was special about the last decade is that we all became much more concerned about climate change. And you can measure that. We measure that with this red line. You can measure the level of concern about climate change by reading the newspaper every day, or letting a computer read the newspaper every day for you, and measuring how many climate stories there are, how negative they are, how scary these stories are. And we measure kind of the unexpected amount of news every month. And this red line shows the cumulative climate concern shocks. Starting in late 2012, we see this huge run-up in concern about climate. And that coincides with this blue line, which is the cumulative return you would have gotten by buying green stocks and shorting brown. So the trends line up, but you also see some of the wiggles line up. So what that tells you is when people become more concerned about climate change, that tends to be good news for green stocks. It tends to be bad news for brown stocks. And it makes sense, right? If we all become really concerned about climate change, we expect governments to act, right? Things like carbon taxes might become more likely. A carbon tax is really bad news for a brown stock, right? But it's actually pretty good news for a green stock. So then we do something a little tougher. We ask, what if the last decade had been different? What if in the last decade we had not become more concerned about climate? What would this return have been like on green minus brown stocks? And what we find is that, well, what you would have gotten is this red line. If the last decade had been different, if we had not become concerned about climate, actually green would have underperformed brown, right? So what we're saying is the only reason green outperformed is because the last 10 years were very special. What was special about the last 10 years is there was this huge growth and concern about climate change. And this is what leads me to say, no, I do not expect green stocks to outperform going forward, right? What leads me to say that is this downward trend. Once you take away these unexpected shocks to climate concerns, well, we actually would have seen green underperforming brown. Why should you care about this? First of all, there's an implication for ESG investors, and this is the bad news. Our message is that you should not expect the strong recent performance of green stocks to continue. You should also care if you care about the planet. It's actually good news for the planet that green firms have lower expected returns going forward. You have to remember that a stock's expected return is the same thing as cost of capital. And if you care about the planet, you want green stocks to have a low cost of capital. Because if we have a low cost of capital on green firms, that creates an incentive for all firms to become greener. It also induces green firms to expand their operations. It expands dirty firms to make their operations smaller, leading to a positive environmental impact. Thank you.